Hello learners. So in this video we are going to talk about different types of strike prices in FNO options. So let's start with it. So here in this screen you can see in the chart I have written some text over here with the different types of strike prices. So let us explain first of all what does a strike price refers to. So a strike price is the price at which a trader puts his trade for a call or a put option. Through that, we can calculate whether it's first of all in the money strike price, out of the money strike price, or ATM or at the money strike price. Now let us talk about what are these strike prices and how are they termed as these three types. So in this chart, we are going to search in this section, symbol search, we are going to select here options. We are going to go with the Nifty 50 index because the Nifty 50 chart is open. So let us start. So as you can see over here, you can see there are all the different expiry days, weekly expiry days available only. So the latest weekly expiry is 20th March. So click on 20th March. We can see this week expiries, and here in this option you can see this is the strike option. So as you can see there is a 50 points difference in each strike price, as you can see over here. So now the market is moving at, you can see here it is down, here it is highlighted over that the market is running now at 22,397 points currently, which is the current market price, that is Nifty's current price running. So now how to define the different types of strike prices here. So we'll just go here once again, we'll just click on Nifty 50 once again, and now every price above to this Nifty's original current price is can be termed as in the money if we are going for a call option. Listen it once again. Every price, every strike price that is we can see before this current price in Nifty 50 can be termed as in the money in call option. In the money means that the current price is higher than the strike prices. Similarly, the nearest strike price to the current price, or in this case 22,350, it can be termed as at the money strike price, which is the nearest strike price to the Nifty 50 current price. So similarly, the at the money option goes the same for put option as well. So for put option as well, the ATM would be 22,350, but the in the money option for put option would be the all the strike prices below the Nifty 50 current price. Okay, now coming to the, we have learned about in the money, we have learned about at the money. Now out of the money. Out of the money means any prices going further beyond the current price of the Nifty 50 in call option is called out of the money call options, which can be now here seen as the all the strike prices below the current price of, below or more than the current price of Nifty 50, like 22,400, 20,450, 500, 550, and further. These are all the out of the money options, and they are sold very cheap in the market. As you can see, as we move from in the money to out of the money option, the price of the premium gets decreased in call option. Similarly, as we move from in the money to out of the money, now here you can see from downwards to the upward direction, because in put option scenario, in the money options are below the current or above the current price of the Nifty 50 index, because it is in a put option. That is, if the market is going to move in downwards direction, our put premiums are going to increase. So in this, the in the money options are the strike prices which are higher than the Nifty 50 current price. So the all the strike prices below the Nifty 50 current price, as we can see, are in the money options. Similarly, in this, the put options decreases as we move from higher strike prices to lower strike prices, which is moving from in the money options to at the money and then out of the money options. So similarly, for put options, the in the money is the strike price is higher than the current price. At the money remains the same for both call and put options, and in the money options are Nifty price below the current market price of Nifty 50, which are can be termed as out of the money options for put. So this is the types of different types of strike prices in the FNO section, which is the option segment, and the premiums decreases from in the money to out of the money options. At the money options are at the basic level of the, so they are similar for, generally they are similar for both call and put options. Again, if we open this option chain over here, we can see that in Nifty 50 the strike prices, as here we can see, ATM prices like 350 and 400 is almost similar. This is okay, so 22,400 here we can see as the current ATM price, as the strike price values of the premium for both these options in the put and the call segment are almost similar. So what is the ATM option over here is 22,400, which is nearest to the options price. Sorry, the Nifty 50 spot price, which is 22,397. So this is the closest strike price. So this is the ATM option for it. Okay, so that is the premium movements as we see in the market. So these were the types of strike prices in the market. Thank you. Connect with you in the next video. Thank you so much.